Welcome to Storm Stock Solutions. I'm Grant Mercer, and this is your weekly closing wrap. It's been a week where politics, policy, and portfolios collided, with tariffs suddenly back at center stage and a fresh pocket of stress emerging in private credit. So let's bring some clarity to the chaos as we head into the new week. Let's start with a big macro story. According to reporting from MarketWatch, U.S. stock futures are dipping as traders digest a major Supreme Court ruling that overturned most of former President Trump's tariffs. That's a fundamental reset to a key piece of trade policy. The court decision removes a lot of existing tariffs from the playing field, but at the same time, investors are now waiting for clarity on what a new tariff framework might look like going forward. In other words, the market is losing the old rulebook before it sees the new one. That kind of vacuum tends to show up not as panic, but as hesitation, lighter risk-taking, more two-way trading, and a premium on companies with clear cost structures and strong balance sheets. You can see why retailers suddenly matter more than usual. MarketWatch highlights that names like Home Depot and TJX are reporting this week, and tariffs, and including potential refunds from tariffs that have been struck down, are moving from the fine print to the front page. Traders will be focused on a few things. Do these companies see meaningful cost relief if tariffs go away? Do they expect to pass savings through to consumers? And how do they plan for a future where trade rules could shift again if new tariffs are proposed? On the winning side of the ledger this week, strength wasn't really about a hot sector, it was about household finance themes. One of the most read pieces on MarketWatch dug into a parent plus loan situation. An ex-wife taking on a $100,000 loan for a child, and the ex-husband asking whether he's morally or legally on the hook. That's not a ticker symbol story, but it reflects a bigger undercurrent. Student debt, family balance sheets, and the strain that can put on consumption. When these personal finance stories dominate, it often tells you investors are thinking about cash flow, obligations, and resilience, not just about chasing the next growth story. For consumer lenders, servicers, and student loan-related names, professionals will be watching whether this kind of coverage keeps policy and relief programs in the spotlight or reinforces caution around credit quality. Now to the pressure points. One clear handle with care area this week was asset managers tied into private credit. As MarketWatch reported, there was a notable slump in asset manager stocks, driven by worries about a private credit fund managed by Blue Owl Capital. What rattled investors wasn't just one fund, it was the fear of ripple effects. The possibility that leverage or opaque exposures in private credit strategies could bleed into the broader financial system. This is where professionals start asking, are credit spreads compensating for the real risk? Are fee-hungry managers reaching too far for yield? And if there's a problem in one corner of private credit, does it stay there or spill into listed funds, banks, or insurance portfolios? So for the week, the message from that pocket of the market was clear. Financials linked to private credit complexity are an area to handle with care. There's also a broader safe haven theme under review. Another MarketWatch piece notes that gold, after a spectacular multi-year bull run, has been trading more like a momentum play than a classic hedge. When a traditional safety asset starts behaving like a high beta trade, that complicates the playbook. If gold is less reliable as a ballast during stress, traders may lean more on cash, short-term treasuries, or diversification rather than assuming one asset class will always come to the rescue. Stepping back, the macro and policy wrap for the week really revolves around three things. First, trade. The Supreme Court's move on tariffs is a regime change. And until there's clearer guidance on any new tariff plans, multinationals with complex supply chains will face an extra layer of uncertainty. Second, credit. Jitters around private credit remind the market that the era of easy money is over, and the risks taken when rates were low are being repriced. Third, haven behavior. If gold's role is shifting, the market's traditional risk-off toolkit may need a refresh. Amid all that, there were some under-the-radar stories that are worth treating as a bigger picture watch list, not stock calls. Several popular MarketWatch columns focused on estate planning and intergenerational wealth. An 80-year-old with $1 million worried about inheritance taxes, a widow grappling with a $2 million settlement and what she owes a stepdaughter, and a retiree debating whether to tap retirement accounts instead of taking out a loan for home repairs. None of that is about beating the market next week, but all of it is about how money actually moves, from one generation to the next, from tax-advantaged accounts into real-world spending. Investors will be watching whether these themes translate into demand for financial planning, insurance products, and tax-efficient vehicles. Again, not a recommendation, but a reminder that demographics and planning can drive steady flows into certain parts of the market over time. We also saw a piece on older high earners, a 71-year-old making $300,000 at a Fortune 200 company, wondering whether to work until 75. That speaks to another sleeper theme: delayed retirement. If more people work longer, that can support consumer spending, keep labor participation higher, and influence everything from housing demand to healthcare utilization. So, looking ahead into next week, the focus is going to be on how quickly Washington and the White House clarify any new tariff vision following the Supreme Court ruling, what major retailers say about costs, pricing power, and refunds, and whether private credit worries fade or flare up in fresh headlines. Those will be the levers pulling on sentiment as traders position for the next leg. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Stormstock Solutions,